Hi friends, welcome back. So big tech earnings are out. We got reports from Google and Microsoft, and I want to go over a couple other things. So let's just jump right in. This is a headline that actually caught my attention. I think captures what we're going through right now. We'll read it together here. Is fast food chains find a way around $20 minimum wage, right? So you got to pay workers $20 minimum wage. How do you get around that? Well, you just get rid of the workers. So if you don't have workers, you don't have to pay them. And essentially, you replace them with these kiosk machine kind of things. This is a picture of McDonald's, and I've seen these in the USA, at least at McDonald's. But I'll just tell you, here in Busan, Korea, the kiosk machines are everywhere, not just fast food. Basically, all of our restaurants have them. And if they don't have it at the front of the restaurant, they actually put it on the table. It is a really common thing. So it's basically like an iPad on the table, a small little thing, and you order. And it's I personally like this stuff. I can see exactly what I'm ordering, and I can adjust whatever, and I can order at any time. I don't have to wait for a waitress and then or waiter, and then it beeps at the at their counter, and then they know to bring whatever to you. So I prefer this stuff, but I do understand though that will replace some jobs. We are actually talking about this first because this relates to the big tech companies and essentially who's developing the technology to replace workers. That's what we're talking about here. Also, to how do companies get around paying $20 an hour? You work them less. That's another thing that they're doing. I was reading about that. And the other thing that you do, how do you afford the $20 an hour? You raise prices. So this says fast food business hiking prices because of higher minimum wage. One thing I want to mention with this stuff as well is when we talk about companies and businesses, I want you to think about the trends, understand the market, right? So we see that AI is going to replace workers. Another thing that we see happening in the market is as these companies mature, they're not going to have the same growth rates that they once were. So Meta, for example, they're like, okay, there's a couple things we can do. So one is we're going to try to grow out our metaverse thing. That's why we change our name, we build the goggles, etc. And how can we make the stock more attractive? Well, they're going to offer a dividend. And now this is an older headline. This is back in February 1st, 2024. And they're going to start buying back their stocks, right? So what do you do basically with your profits slash cash reserves? Well, for them, we're going to share our profits with the stockholders, and they'll try to make our stock more attractive. And it was interesting because Google is now offering that as well. They're going to be offering a dividend. It was just announced April 25th, 2024. So I actually expect a lot of companies to start doing this. And this is the key, guys, is how to think about this. So why would you do this? Again, you're trying to make your stock more attractive because if you can't, predict crazy growth like you did in the past, because they're mature companies, they can't, Alphabet can't double in size every year. It's not going to happen. But one thing I think is interesting, though, that for me it represents an unhealthy market, is look how crazy the shares are jumping. And if you're in this stock, that's awesome. I mean, of course you want your stock to go up, but I'm just saying I don't think this is healthy for a company of this size for stocks to be moving like 14% in a day. It's crazy. The other thing is too is I was thinking about how when you see these wild moves in the market, it can signify a couple of things. One is there's this wild speculation with derivatives or whatever. The other thing is too, you could say, well, our market doesn't know what it's doing because it's sort of like trying to figure out price discovery still, which is weird for the size of these types of companies, but it just shows you how uncertain our markets are and our economy. I just did a video on stagflation, which we'll go over in a moment, or please watch that video. But I want to say, though, that Google does make money. I mean, I can literally see it right here. It was it $1.89 per share in earnings that beat the estimates of $1.51. The revenue came above estimates as well. At 80 billion. They make a lot of money over there. YouTube ad revenue, which I pay attention to this stuff because I'm on YouTube all the time, came in at 8 billion. That beat the 7.72. Google Cloud revenue is also was a beat, so they again beat estimates. They're at 9.57 billion, so I guess their cloud is worth more than their YouTube, at least in terms of revenue. And then the traffic acquisition cost came in around expected. This is essentially, my understanding is companies essentially pay money to divert your eyes and your mouse clicks, right? So you're trying to acquire revenue essentially. You're buying the click to say, hey, come look at me, come look at me. This is actually their revenue report here, and you can see it. So it was interesting in 2023. This would be March of last year. The YouTube's was like 6.6 billion, and now it's at 8, so that went up. Google Network, Google Advertising. I'm looking at this stuff here. So you have Google Search. So that went up also from last quarter or last year was about 40 billion. Now they're at 46. Google Network, honestly, guys, I'm not quite sure what you would define as Google Network. If you guys know, you can let me know. I don't know if that means like your Google Fiber stuff, or I'm just not sure what that is. I know what search is. I know what ads are. I'll maybe Fiber stuff. And then that's basically flat. You have your subscriptions and your platforms here, right there. That also went up. Google services, right? So that their revenues go up. These are all your revenues here. And then this would be number of employees is kind of interesting. So it looks like to increase their profits, they did let go of some people. I can see it right here, about 10,000 people. It says number of employees were 190,000 in 2023. That was of March, and then now it's in 180,000 about. Also, too, I want to mention this. This is actually just to give you guys an idea, because people always are curious and you ask, is how much do I make on YouTube? So I see these things all the time, and it fluctuates the ad revenue on YouTube. So a typical video, and I'm just showing you this one, is a general market video, financial markets bet on this. Per 1,000 views, the RPM is $4.66. So this video gets a couple thousand views, so it ends up being around $10 if you're curious. And my demographics are sharing with you guys because everyone's performance on YouTube is going to be a little bit different depending on which countries people are watching you from and what age groups they are. So my age group who watches my videos tend to be between 25 and then upwards to 65 plus. You can see all the numbers right here. So the bulk of the audience is like between 25 and say 54, but then there's a sizable chunk about 55 plus, right? So like 15% of people. And then for me, 61% are from the US, then you have 7.4 from Canada, 3.2 from UK, and then 2.5% from Australia, and then 1.5 from Singapore. So I'm just sharing it with you guys if you're ever curious, these kind of things. And also too, I mentioned, as you can see, I don't make a ton of money on YouTube. However, the goal is essentially just to provide you an education and provide value. And essentially you come for free and watch YouTube. And I think that's something that when I'm talking about Google's business or just talking about YouTube, why I think YouTube will probably be around for years. I think it's a useful platform. I know there's a lot of crazy and shady stuff that go on YouTube, but there's also a lot of good stuff going on YouTube. And moreover, if you do like my channel, I always encourage you to pick up a copy of my book. It helps support the channel, and also too, it shows that you are awesome. So it's called Positive Angle, and I think you'll like it. And kind of my feeling on this stuff is you always want to provide people value, and they'll come back. And that's sort of why I think something like a Google with their business model, it provides value with the Google search, be it YouTube, and even their cloud services, etc. So a lot of people pay for Google's suite of they have like all the different apps that they have. I can't remember what they call it. It's not corporate suite. You guys can write in the comments. I don't remember what it's called, their subscription services. But you got like Google Drive, and then you can get all the premium stuff if you have a business. The other thing too I want to mention, which is kind of interesting, which you'll see, since they let go a lot of employees, they had to pay severance stuff. And then it was saying here, if I read this correctly, it says compensation expenses include employee severance and related charges for the 3 months ended March 31st, 2024 of $716 million, a $1.3 billion decrease. So these kind of things add up, right? So I'll be curious how many companies out there, actually tell you, exactly how much they're spending on severance. I can't remember how many people. I think Microsoft did some layoffs too. I don't remember exactly which departments, but I remember seeing that. But they're also reporting growth as well. I just want to put that in there because even though some of these companies may report higher revenues, they did lay off people, and that was one way to cut expenses for them, to try to help the bottom line. But ultimately, though, the people that stay, are they going to have to work more, or are these kind of companies just cutting services, or what? Right. So that's the question. But it says here, Microsoft Cloud growth accelerates on back of AI push. That's why I started with the fast food thing, because I do think there is going to be some uses for the AI. So my personal opinion is yes, I think we're going to use this AI stuff, whatever. It depends how you want to define AI, because AI can be a broad definition, right? Are we going to be like having relationships and talking to the robots, right? That kind of thing. Or is it going to just be more like an assistant, like spell checker or, grammar checker, or in the sense of like for people who do coding, or it'll build the right code quickly, etc. I'm just saying how we define AI, I think is still a bit of loose terms, and what are the uses for it, medical uses, manufacturing, all kinds of things that we could be talking about. But Microsoft, though, my opinion on them is similar to Google. So I think Microsoft Cloud and their business was at Microsoft Teams. I think they're pretty far ahead of Google's business offerings. We'll take a look at sort of what Microsoft is reporting here. So it says here revenue was 62 billion, increased 18%. Then if you factor in currency, it's 16%. Operating income was 27 billion, so that increased 33%. What the heck? And then net income, right? How much money are you making? Was 21.9 billion, increased 33%. Earnings per share was 293. I can actually see this here, and this is again, it looks like there's positive gains all around, and it's very, very different than when we looked at the Tesla ones, which are all going down year over year. This shows you sort of where different things are happening for them. So the biggest gains for Microsoft are in Azure and other cloud services. Even LinkedIn is up 9%. Right, Office 365 commercial, that's what they call that thing. 17% up. I mean, it's here. The only one that was a loss for them was devices, negative 9%, which I thought was interesting. And it also shows up in their Windows OEM. So I guess they're just not selling as many computers or Windows. An OEM is like when it's pre-installed on a computer. I think that's what OEM. I can't remember. It's like isn't original EM manufacturer. I can't remember what the E is, but I'm pretty sure that's what it is. And you guys can write in the comments for exactly what OEM is. The other thing too, which I was looking at this as well. So before they were struggling a bit on their Microsoft Xbox stuff. So I saw that these losses here, or not loss is the right word, but say declines. But I guess they picked up again. I remember before there was a supply chain issue with both the new PlayStation and the new Microsoft Xbox, but I guess they're getting them out now. And then if you, and I guess, let's see, this would be 2024. Okay, this is their projection, sorry. So this is their projections for quarter 2 and quarter 3, 2024. So they're projecting a whole bunch of like Xbox stuff coming up. And then all around though, I mean, it looks like they're growing their revenues. I can see this stuff here. And then the other thing that which begs to question, right? Because we see growth with Microsoft, we see growth with Google. We just literally see it in the numbers. Is what about their valuations? And I just pulled this up quickly. So these PEs and PEGs are not quite updated to the today's numbers, but it just gives you a ballpark of sort of what we're talking about here. Now, when we compare Meta, Google, Microsoft, and Tesla, I just want to take a look at their PE non-gaps, and you guys will see a very stark difference. Meta comes in at 28, Google at 27, Microsoft at 36, and then Tesla's at 59, like nearly 60. How can you think about these in a kind of a reasonable way? So this is where PEG becomes useful. And if you want to use forward PEG, non-gap or PEG, but we'll use forward is fine. But just to give you a ballpark figure. Generally speaking, so this is PE is the price of stock compared to how much a company earns. PEG is like your earnings compared to your growth. You want this to be around 1, these PEG ratios, right? And so here, Meta and Google is close to 1. Under 1 would be a little bit better. Microsoft's a little bit high there, but then Tesla's like at 7. So, this kind of stuff is where Tesla really is the outlier. They try to say they're a tech company, but even compared to the other tech companies, they're overvalued. And then when you compare it to car companies, it's ludicrous. So these numbers, though, in terms of PEs and gross, so for example, if you say, hey, Google, your PE is like 27, something like that, but then your growth comes in at like 30%, which we looked at, it's like, okay, that kind of justifies it. Does it justify a 40% stock movement? Maybe not, but that's how our markets are doing. Microsoft P is a little bit high. The thing is, though, you also want to be thinking about like, what are these companies' balance sheets, and other things like what is their cash flow, et cetera. We can go through a whole bunch of different numbers. But the bottom line, which I want to show you guys, is that these companies are profitable for the time being. I don't think they're ever going to sink into like negatives, at least the Metas, the Googles, and the Microsofts. The thing is that you want to, offer people services and things that they're always going to be using. And also, too, you want to have something where you can increase prices. So in the situation of Google, say an YouTube example is, hey, if they got a strong user base and people keep watching, I'm just using YouTube as an example, then people keep watching, and then if people want to advertise on YouTube, then Google's like, fine, you're gonna have to pay higher rates. they can just raise the prices, right? And as long as the demand is there for that, they're gonna make money. The same with Microsoft. I'm just using an example of their Microsoft Teams or any of their products. If people are dependent on their products to do their daily tasks, And if you know, from Microsoft's point of view, there's like, hey, we're just going to bump up our prices 5% and people keep paying it, they're going to stay in business. So the difference is, like I said, Google, Microsoft, people depend on this stuff. The thing with Tesla, though, they just have so much competition. Is like, if Tesla raises their prices, say 10%, someone's gonna be like, I'm not paying an extra 10% for a Tesla. I'm gonna go get another type of brand, a type of car, right? And so this is sort of, for me, the Google and Microsoft are a little bit more sustainable. The Meta is an interesting one. Like, you know, Meta again is free, but it's not really free because they take our data. But is there another platform that would challenge Meta? And theoretically, it's TikTok, or theoretically Twitter, or theoretically it's Snapchat or whatever. And so that's something like, for Meta is, you know, they're losing the younger kids, and that's why they're going to develop goggles and other things like that. So the reason why I'm talking with you guys about these kind of things is I want you to understand that when we talk about all this stuff together, I like to talk about the macro, what's going on, you know, in the overall economy. Do consumers have money? Do consumers not have money? Where's the Fed interest rates? Also, we talk about what are individual companies doing in terms of, are they growing revenue, not growing revenue? Are they profitable, not profitable? Are the profits growing, not growing? And talk about valuations. Is a company at a fair value? It's obviously, you know, complicated, but if you follow the channel every day, and also too, if we, you know, talk with these things in the community, which we do all the time, it's fun because there's not necessarily right answers per se, because, you know, I can't predict the 100% of the future of Microsoft, stuff like that. But the more you look at these things, you'll just kind of see like why I say like Tesla's like crazy outlier. Where their numbers are bad, plus they're just giving you all these crazy promises. And so you'll see what I'm talking about when we talk about Tesla. That's why Tesla's a fun one to talk about, because it's definitely in a bubble compared to the other companies. So hope you guys understand my thoughts on all this stuff. Love to hear your thoughts as well. And I'll catch you next video.